Are you concerned about the potential for a stock market crash, a recession, or even an economic collapse? Billionaire investor Ray Dalio, who has a proven track record of predicting such events, is now warning about the risks of facing the US economy. He sees the possibility of a banking crisis and a sharp decline in the value of the US dollar, which could lead to a wider economic downturn. While Dalio acknowledges that his predictions are not certainties, his historical analysis over the last 500 years shows that such events are inevitable. So what steps can you take to financially prepare for the risks ahead? Let's see Dalio's insights and recommendations for protecting your investments and weathering the storms of an uncertain economy. But before diving into more about that, let me first welcome you aboard for this episode of Finance Arc. On this channel, we set sail on a journey into the vast realm of financial matters, where we guide you through every step of the process and assist you in navigating the challenging world of finance, from simple budgeting advice to more advanced investing strategies. So grab your life vest and get aboard the Finance Arc. Billionaire investor Ray Dalio has a proven track record of predicting economic downturns. He accurately foresaw the 2008 financial crisis and warned of the long-term financial strain due to the COVID pandemic. Now he is sounding the alarm about a new risk on the horizon, the possibility of a war with China. Despite acknowledging that his predictions are not certain, Dalio argues that historical patterns over the last 100 years suggest that future catastrophes are inevitable. So, let's get further by discussing Ray Dalio's warnings for the banking collapse, US dollar and upcoming recession, and its potential impact on the stock market, the US dollar, and the economy as a whole. Ray Dalio's warning about the potential systemic risks following the collapse of the Silicon Valley Bank, SVB, is not to be taken lightly. But why? SVB's failure serves as a warning sign that the financial system may be at risk due to the increasing reliance on private credit and risk-taking. SVB primarily served startups and venture capital firms in the tech industry, which has seen significant growth in investment in recent years. However, many of these firms are not profitable and heavily reliant on financing, making them vulnerable to market downturns. Dalio's concerns are valid, as the failure of a large firm like SVB could trigger a domino effect that could spread throughout the entire market. Dalio's warning emphasizes the need for investors and regulators to consider the broader implications of the financial system's increasing reliance on private credit and risk-taking. As he has noted, low interest rates have encouraged investors to take on more risks, leading to an increase in leverage and the rise of zombie firms that can only survive thanks to cheap credit. It's important for investors to understand the risks of investing in firms that are heavily reliant on financing and assess their investments accordingly. Diversification across asset classes and a well-balanced portfolio is key to reducing risk in uncertain times. Additionally, regulators should pay attention to the increasing reliance on private credit and risk-taking and take steps to prevent the failure of a large firm from triggering a domino effect in the market. Have you heard about the collapse of the Silicon Valley Bank? Well, this is a major player in the tech industry, providing financing and services to startups and venture capital firms. But its recent downfall has raised serious concerns about the long-term viability of the tech industry. What caused SVB's collapse? It all started with a large loss that was disclosed in February, causing its stock price to plummet. This led to questions about insider stock sales and management's practices at the bank. For instance, the CEO had sold almost $30 million worth of stock over the past 2 years, prompting calls for him to return the money to depositors. The Securities and Exchange Commission, SEC, of the US has also raised concerns about insider stock sales and abuse of 10b5-1 plans. To address this issue, the SEC has implemented new rules that impose more disclosure, transparency, and timelines for scheduled sales. Ray Dalio, the founder of Bridgewater Associates, has warned that SVB's failure could be a canary in the coal mine for the financial system, signaling potential systemic risks. This is because many tech firms are not profitable and rely heavily on financing, making them vulnerable to market downturns. In other words, the failure of one large firm like SVB could have far-reaching implications for the entire market. So what can we do to prevent such a scenario? One thing is clear, we need increased oversight and regulation of the financial industry, particularly in the tech sector. The industry's growth and investment have created significant risk, and we must address the underlying issues that led to SVB's collapse. So let's ask ourselves, what can we do to prevent potential systemic risks that could have serious consequences for the financial system and the broader economy? Ray Dalio has warned that the world is changing in ways similar to the time leading up to and during World War II, with each country's populism and nationalism growing in preparation for greater conflicts. Dalio, the founder of the $150 billion US hedge fund Bridgewater Associates, suggests that countries less vulnerable to global conflicts, like those in Southeast Asia, will prosper in the coming years. Dalio cites Japan's pre-war era as an example of what is happening today, where a global financial crisis and economic depression led to nationalism and conflict with outside powers. He believes that those who were not involved in the past wars typically fared better than even the winners, and that remaining neutral in the current climate will become increasingly difficult. Moreover, Dalio sees greater risk and consequences for war today than during the Cold War, as China has emerged as the economic rival to the United States. The era of a dollar-dominated world order and globalized economy is fading away, he says, as major powers and their allies form economic, currency, and military blocs. Dalio recommends investing in countries that have sound finances, no serious internal conflicts, are less vulnerable to international war, and are continuing to innovate, including members of the Association of Southeast Asian Nations like Indonesia and Vietnam, as well as India, and countries in the Saudi Arabia-led Gulf Cooperation Council. Looking ahead, Dalio identifies 2024 as a particularly risky period due to the presidential elections that year in both the US and Taiwan. He sees Taiwan as the only major risk point for war between the US and China, predicting that China will attempt to resolve the issue before the end of Chinese leader Xi Jinping's presidency. In navigating such geopolitical challenges, Dalio suggests that Japan's best bet is to bolster its defensive capability so it is not dependent on the US, all while maintaining trade. So now, are you ready to face the harsh reality of the current market situation? Wait, there's more. According to hedge fund manager Crispin Odey, the biggest mistake the markets are making right now is assuming a return to pre-COVID pricing. Odey warns that policymakers are constrained, making it impossible to have the expected combination of good earnings growth and low inflation. We're still dealing with a radically different world from pre-COVID, with less globalization, more government influence, and a shrinking role for financial markets. So what does Odey predict? Inflation will stay higher than the market's expectations, causing the downturn to become riskier. Brace yourself for a longer and more grinding session with a magnitude that is difficult to predict. And while the US is currently priced to be the greatest economy, it is also the center of a financial bubble and most at risk from liquidity being pulled. However, Odey believes that there are still areas of the world, such as parts of Latin America, and commodities that haven't received sufficient investment, that could provide relative attractiveness amidst the tightening world of rising risk premiums and declining liquidity. Are you prepared to weather the storm and seek out opportunities amidst the uncertainty? With Ray Dalio's warning about the potential risks facing the US economy, it's important to take steps to prepare for potential market crashes, recessions, or even economic collapse. While there are no guarantees, his historical analysis shows that such events are inevitable, so it's crucial to consider Dalio's insights and recommendations to safeguard your investments and prepare for an uncertain future. Are you ready to take control of your finances? Subscribe to our channel for more tips on savings and investments. Don't forget to turn on notifications so you never miss a new video. Let's grow our wealth together. Stay tuned!